Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today on our call, we have the CEO, Maury from Quorum Information Technologies back for an update. Quorum trades on the TSX Venture Exchange under the symbol QIS and on the OTC under QIFTF. The company is currently trading at 71 cents with roughly 73 million shares outstanding, or about a $52 million market cap. I'd now like to hand it over to Paul Andriola.
Thanks, Trevor. Maury, great to have you back. We always like to get updates from companies we've interviewed in the past, and that's exactly what we're doing here. So before we jump on the update, though, why don't you just refresh our memory, tell us what Quorum does, and then we can, we'll just hand it over to you. And I know you've got some slides, so we'll let you take it away.
You bet. All right. Thanks, Paul. I appreciate the opportunity to come back and give everybody a quick update here. So I will share one sec. Mm-hmm. So hopefully that looks fine and everybody can see that.
Looks good. Yep.
Excellent. All right. Okay. So what I want to start with is I just want to mention that the presentation I'm showing is available at the URL that you can see at the bottom here. I'm only going to talk to a couple of key slides in this deck, but there's lots of great information. So if somebody wants to go back and take a look, by all means, please go ahead. And let me get rolling. Of course, I've got to show our forward-looking information disclaimer, but I'm going to roll through that particular page and stop here. So this is one of my two key slides that I want to talk to. So first off, just like you had mentioned, right, let me give anybody that's new to the story or anybody that needs a refresher, just a little bit of background on us and tell everybody what we do. So first off, we're providing software and services to the automotive retail industry, right? So the same dealerships where you would buy a car or get your car serviced. Now, I just need to explain a little bit of background about a dealership's business. So a dealership's business is fairly complicated in that they have their sales department, their service department, parts, accounting. All of those different departments have slightly different needs. Plus, they need sales and service CRM solutions. And then they need multiple digital retailing solutions to sell their different products and services online. In addition, everything that is delivered to the dealership needs to typically integrate back to the OEM or back to the manufacturer. The manufacturers like a Toyota or a GM, for instance. The dealership relies on the manufacturer for vehicles, new vehicles, parts, but they also rely on them for doing things like paying for warranty work. So the relationship with that manufacturer is absolutely critical, and that integration is critical as well. The result of all of those needs is that the average dealership has about 25 different categories of software that they utilize to run their business. So imagine running your business with 25 different pieces of software, each with its own reporting solution, and trying to keep the data integrated in those solutions. Sometimes the data is sort of integrated, sometimes it's not. So it's really difficult environment from a dealership perspective to run their business. What Quorum's focus is, and you can see it from the middle of this slide, right? We've got a combination of purposeful product investment, so product we've built, and then 4 strategic acquisitions that we've made in the last 5 years gives us a product suite of 12 essential software solutions that are used in whole or in part by our 1,459 dealership customers. So we've got a solution in 12 of the 25 different categories. And in actual fact, we've got a solution in 12 of the most important of the 25 categories. All right. Couple things just about our customer base. You can see on screen that our software solutions are installed in 42% of the franchised automotive dealerships in Canada, and just under 1% in the US. So obviously the US is a great growth opportunity for us, but in the Canadian market, we're well known and well established from a brand perspective. I do want to highlight a couple of things from our Q2 2022 financial statements. So you can see on screen that we've got a combination of $38.7 million in revenue. Now, that's our reoccurring revenue, which represents 98% of Quorum's total revenue. 28 million of that is SaaS and 10.7 is BDC. The BDC to us is short for the Business Development Center. So think of that as a contact or call center, if you will. That particular group, that BDC, they book service appointments for dealerships' customers, right? So that's their primary focus. They have a couple other focuses, but that's their primary focus. Our number one customer in our BDC, on our BDC services side, is Auto Canada, which is the largest dealer group in the Canadian marketplace. So it's a pretty important piece of our business, and it's very tied in to our SaaS business as well. All right, couple more things. SaaS revenue for us has grown 9% year over year. BDC revenue has grown 12% year over year. You can see adjusted EBITDA for us, 1.4 million or 14% of our total revenue. Last quarter, our adjusted EBITDA margin was 12%. So we're slowly moving our EBITDA margins up. All right, next, what I want to do is I want to give everybody a bit of an update, but I want to do it through an acquisitions lens. So you can see on screen that we've made 4 acquisitions in the last 5 years. And let me just talk through those for everybody. The Autovance acquisition was our first one, made back in 2017. It was a great acquisition for us. They brought different desking solution. They brought a desking solution to our product suite. So a solution that helped dealerships sell cars. And we've since built out the Autovance suite. Now you have a digital retailing solution as well. Rick Johnson, was the president of Autovance, is now our VP of product for product development. And then our DealerMine acquisition in 2018, that was a big acquisition for us. At the time, DealerMine's revenue was just slightly less than Quorum's revenue. So it was a bit of a game changer for us. DealerMine brings to us a service CRM solution, the BDC operations, and a sales CRM solution as well. Jane Webb, who was the director of sales and marketing at DealerMine, is now our VP of sales and marketing at Quorum. And Bruce Atkinson, who was the VP of operations at DealerMine, is our VP of operations at Quorum. And then our Oasis acquisition in 2019 was an acquisition where we took out a competitor. Their product name is Advantage. We moved the Oasis franchise dealers over onto our product suite, and we've since divested of the Oasis product for independent stores. And then our last and most recent acquisition was Accessible Accessories. So that was done, as you can see on screen, in Q2 2022. Pretty exciting acquisition for us, because what we were able to do prior to going into that acquisition was we were able to combine the entities that we'd already acquired into one company. So we basically brought everything together under the one Quorum umbrella. And that was a lot of work for the organization to move from a divisional model to a functional model where we had everything in one Quorum, and then we had our brands that we sold, implemented, supported, and so on and so forth. So when we did the Accessible Accessories acquisition, we already had moved to the one Quorum model. And as a consequence, integrating Accessible was a much easier process for us and went a lot smoother. We now have a template for how we can onboard future acquisitions, and we used it for Accessible. And for us, it was a great acquisition, and it slid in really nicely with the rest of our organization under that one Quorum umbrella. All right. So maybe a couple things about going forward for us now that we've got our one Quorum organization and we pulled all of those pieces together. We're looking forward, and we're really looking at strategically 3 different areas. The first area that we're focused on is cross-selling. You can see on screen across all of our product suite and all of our customers, we've got a $55 million cross-selling opportunity, which is a pretty significant opportunity when you look at our $28 million SaaS run rate, right? It's a 2x opportunity on top of our run rate today. So we're excited about that opportunity, and we're really working to capitalize on that better. We've done a lot of things within the organization. We've harmonized our sales team with our account management team to really funnel leads properly from account management into sales and capitalize on those, and a number of other things to take full advantage of that cross-selling opportunity. The second thing for us strategically going forward is we continue to focus on new rooftops. So bringing new dealerships under the Quorum umbrella. We're changing our strategy on that side a bit. We're becoming a lot more thoughtful in where we're focused. So right now in the marketplace, what we're seeing is vehicle sales products aren't that much in demand. Most dealerships still are struggling with inventory and have a lot of buyers for any particular car that they might have on the lot. So what we're finding is our products that are service and parts focused are products that really resonate with the dealerships. They're in demand. And hence we're focusing on those particular products, the products where we have market demand when it comes to bringing new rooftops in. Keeping in mind that most of the products in our product suite we can sell as a standalone product into a dealership, and then thereby we can sort of land and expand from that particular product. And then the third element of our strategy right now is the element around really trying to improve our profitability. We're trying to balance growth and profitability as an organization. You can tell from what I've talked about already that we're taking a lot more thoughtful approach and a more strategic approach on sales and trying to make sure we manage our costs on how we're selling and how we're going to market and capitalizing on cross-selling and bringing new rooftops in. But we've also went across the organization and looked at any cost savings opportunities throughout the company. Now that we're under a one Quorum umbrella, and really tried to drive any costs out of the organization, get leaner as a company, and of course improve our EBITDA margins as an organization. And with that said, Paul, maybe I'll hand it back over to you and see if there's any questions for me.
You got it. Thank you so much, Maury. And a reminder to everybody that's listening, if you do have some questions for Maury, please use the chat function and we will ask that question. Excuse me. Let's talk about Q2 that you just finished a little while ago. Quite decent numbers. You grew the business, record revenues, my understanding, and kind of what I see here is all the metrics improved here. So you obviously made that acquisition. How much did that contribute to the business, and what else is contributing to the business to generate the record revenues?
Yeah. So the acquisition helped us on the SaaS revenue side of things. Mm-hmm. So if you're looking at our 9% year-over-year growth, I think the acquisition was 6% of that, and with the other 3% coming through organic growth. So yeah, it was a contributor not only on the revenue side of things, but also it was a really solid business from an EBITDA margin point of view. So it helped us there. Going forward with our latest acquisition, we're now, as you can imagine, integrating that product into the rest of our product suite. And so what we really hope to do is to be able to not only market our product suite to the existing customers from that acquisition, but also market that product to our pre-acquisition customer base as well.
Mm-hmm. And do you feel that there's more opportunities on the M&A side? Is this sort of your last acquisition, or is there other opportunities out there?
No, there's definitely more opportunities. I said at the onset, right? There's 25 different categories of software out there. We play in 12 of the critical ones, which leaves us lots of opportunity for other acquisitions in other categories. For us right now, there are a number of acquisition opportunities that we've looked at over the last quarter or so. We are not actively pursuing any acquisitions right at the moment, and for a couple of reasons. So we're staying in the market and we're still looking, and if we see something that's really exciting, of course we would high grade that. But we're slowing down a little bit on the acquisition side of things. And the two reasons is we just want to see where the economy goes and what that means for dealer sentiment We're staying really close to our dealership customers and trying to understand their perspective and what the economy is meaning for their operations. And so we want to have a better idea where the economy goes and of course where interest rates go. And then the other thing that we're wanting to get put in place strategically is we do want to continue to expand our EBITDA margins, like I mentioned before, and we'd like to see the business cash flowing more because we'd like to have future acquisition paid for not just out of equity raises or out of future debt, but also out of existing cash flows. We will. I'm sure at some point in time in the near future get back more actively into the acquisition market, but I think we're taking a conservative approach right now for good reasons.
Yeah, understand. The balance sheet. What now that you've done this acquisition, what does the balance sheet look like? What's your cash position look like? Do you have any debt? What can you tell us there?
Yeah. So Paul, as you're talking, sorry, I'm going to keep flipping to different slides.
Yeah, please. Yeah, that works.
To help support
great.
what I'm talking about. So we have debt, as you can see on screen, with BDC Capital, so we're at the point where we've got unsecured government debt that's at 0%, and then we've got BDC, Business Development Bank of Canada, debt as well. So those are our two debt pieces. Cash balance wise, I thought I had my cash balance on this particular screen. I see that I don't. Sorry, I'm just off the top of my head. I don't want to tell you the wrong number for what my Q2 cash balance was.
Okay.
So just bear with me. I'll get you a cash balance number. Maybe just jump ahead to the next question. We were a little over $5 million at the end of Q2 cash.
Okay, perfect. So I noticed your customer count jumped from just over 1,000 to 1,459. Is that due to the acquisition? Or is that sort of the level of growth you're seeing in customer acquisition right now?
Yeah, so most of our growth that we've seen over the last 5 years has been through acquisition. We have had some organic growth within there as well, but we've been a lot more successful at growing our customer base through acquisition. And if you think about strategically from Quorum, what is our easiest path going forward? If we can really capitalize on cross-selling as an organization, do a better job than we've done in the past, and we're doing everything we can in the organization to make sure we capitalize better on cross-selling, and we can become a cross-selling machine, we will of course continue to organically add rooftops. But a lot more meaningfully, we can add rooftops through acquisition. So we really, long term, we're interested in continuing acquisitions like I talked about before, because it adds meaningful numbers of rooftops to our customer base. And then as we do that, like I said before, we want to be a cross-selling machine and really make sure that we allow dealerships to understand the value we bring to the table from our complete product suite.
Now, earlier you talked about, the focus is going to be on sort of more cash generation or profitability. How do you guys get there? What gets you to, what do you need to do to sort of improve your profitability?
Yeah, so part of it is how we go to market, right? If we look at cross-selling and that being a primary driver to us for revenue growth, those are our highest gross margin sales we can make in the organization. They're the lowest CAC sales that we're going to make in the organization. And then the other piece of that is if we're organically, as per our strategy, we're organically adding rooftops, but we're doing it based on what's in market demand. So we're very focused on what's in market demand. Once again, they're a lower CAC sale for us, and they're going to help us. So that's part of the strategy. The other part, though, is as I mentioned before, once we brought all of the companies together, all the divisions together, and we really worked from a functional model as an organization, we just found there was lots of opportunities to drive costs out of the business. And so we're going through that particular exercise and really making sure that we're driving as many costs out of the company as we possibly can. I don't want to overwhelm people with slides, but in the deck, I do have a slide that sort of talks to those particular approaches, and you can see that we're making headway. We're moving margins up, which is we want to continue to work on that. We did a lot of work in Q3 to really set ourselves up for Q4 and for 2023 as a higher margin business, higher EBITDA margin business.
Fantastic. So, I mean, we've, clearly over the last couple of years, there's been all sorts of, volatility in all sorts of industries, but the car industry was one where you heard of all sorts of shortages and, price of used cars went crazy. What sort of trends do you see? Do you see sort of things normalizing? Do you see, you mentioned interest rates and possible economic slowdown. What can you sort of tell us about kind of the lay of the land in the industry right now?
Right. Okay, well, let me split my comments between a couple things. So the first thing is, this has been widely publicized in the media out there, and people have probably experienced this pain if they've been out car shopping. But as we know, right, there's a lack of inventory, lack of new inventory, lack of used inventory. And what we're seeing is prices, of course, reflect that. Prices of vehicles reflect that. There's more demand than there is supply. We see that balancing out over time, and we see it balancing out because the supply chain is getting better. It's getting fixed over time. We're starting to see more and more vehicles show up at dealerships' lots, and so they're starting to see their inventory slowly return back to normal. But then what we're also believing will happen in the near term is, as interest rates, of course, continue to go up and hopefully level off here soon, that will curtail some of the demand. And especially if we move into a recession, as most are predicting out there, that will curtail some of the demand. So we think that dealerships are going to get back into that mode, and this will take some time, but they're going to get back into that mode where they have to start selling cars again. They're not order takers. They need to get out there and selling cars, which will bode well for consumers because the price of cars, it'll be more competitive. And so the price of cars should come down. The other element that we see with dealerships is every time there is a situation where there is some kind of recession, one of the things that really helps the dealerships out is their fixed operations business. That service and parts business is the anchor for them. That business tends to remain pretty steady through different recessions, and it's their highest gross margin part of their business. So it tends to recession-proof dealerships a bit and really sort of help them out. And we want to, I guess what we're looking for is we're looking to make sure that that's going to be the case, that those trends are going to happen as I sort of outlaid them. And then we want to see what that means from a dealership sentiment perspective. So I think, those are the pieces that we're looking at.
Gotcha. And then, back to your company specifically, what challenges are you facing right now? What sort of keeps you up at night, if anything?
Yeah, probably the biggest challenge, and you hear this probably out of anybody that's leading a tech company, is staffing. It's people, finding people,
Sure.
especially software development staff. I mean, it's being able to find and hold on to the talent that you have. So we spend a lot of time inside of Quorum measuring employee engagement, determining what we can do to make Quorum a better place to work, really trying to keep our team engaged in the organization, listening to their ideas and how we can improve, because our team is absolutely critical to us. And it's a time in the marketplace when it's, we know people have choices and they can move, especially in the software development side of things, they can move from one job to another. And so, we're just really trying to make sure our team understands how much we value them and make sure we make meaningful changes inside the company to hang on to the talent we have, but also make meaningful changes so we can attract new talent.
Maury, how old's the company now?
Oh gosh, Paul, I don't like to think back that far. 27 years old, I believe. I'd have to go back and look at the official start date, but
Gotcha.
somewhere around there. We've been at it for a long time. I mean, the last 5 years has been very exciting with the acquisition growth for us as an organization, and it's been a long ride. But I like I said, the last 5 years has been exciting, and so I've. It's reinvigorated me, and I think it's reinvigorated our whole organization to see us growing that fast through acquisition.
And through all the acquisitions and everything, what sort of staff level do you have? Clearly, it's grown. But how many people do you have now?
Yeah. So we fluctuate a fair bit. So I'm going to say we're approximately 450 staff.
Wow. Okay.
Now, keep in mind that about 250 of those are related to the BDC, right? That business development center or contact center that I was talking about before.
Okay.
And with 200 of or so staff being related to the software business.
Gotcha. And if we could, take out your crystal ball, what do you think this business looks like 5 years from now? I mean, have you penetrated the U.S. in a significant way by then? And sort of what's the breadth of product look like by then?
Yeah. So I'm going to give you a slightly longer answer to your question. So a few things, right? So first off, I think in the automotive space, we're going to see a lot of change, right? Dealerships need to continue to modernize. They need to continue to make sure that they have digital offerings for everything that they sell out there. But I think what we're going to end up seeing is we're going to see a real hybrid model in the industry. So we're going to see a case where, you might start a vehicle purchase online, and then you might go in dealership for some things or contact the dealership for some things and go back online to complete the transaction. And I think service transactions are going to be the same way, right? You may be a touchless service transaction, or you may go in dealership. And so I think dealerships have to be very flexible with the tools that they put in place so they can deliver on a hybrid model, whether it's an in-store experience for a consumer or whether it's a completely online experience or a combination of both. We're betting that's the path that dealerships will need to go down. And so we're focusing all of our solutions so that they offer that kind of capability. So from a product perspective, that's where we're going. Just from a growth perspective, we believe heavily in the Canadian marketplace. We think that we have lots of not only growth in terms of new rooftops in the Canadian marketplace, so we can continue to grow rooftops with at least one of our solutions. But then, of course, we just really want to become a much better organization at cross-selling. So 5 years out, we really want to see ourselves as a fantastic cross-selling organization where we're truly selling the utilization of that product in the store and the ROI that product that we've added on has helped the dealership. And then the US marketplace, yes, I think for us in the next 5 years, we'll see growth in the US marketplace, but I think like we've seen in the Canadian marketplace and to a lesser extent in the US, a lot of that growth will come through our M&A activity. And I'd like to see our product suite rounded out a lot broader than what we have today through M&A activity as well.
And then from sort of when you're talking to investors or you're talking to somebody like me, what do you think makes the most sense for investors to really pay attention to sort of determine how the business is sort of growing or function? Is it revenues? Is it the bottom line? Is it, rooftops? What do you think?
Yeah. So I think what you're going to see from us is continual growth on the revenue side of things. So year over year, we're very focused on year over year revenue growth and more specifically year over year SaaS growth. We pay attention to both, but we tend to favor SaaS growth because it's just higher margin growth for us. So yeah, I would say those particular metrics are key to us and something that investors should watch. And then EBITDA margin. and EBITDA margin expansion. That to us is an important one as well. You know, and as you know all too well, right? There's always a balancing act between your EBITDA margins and your growth, and so we're trying to balance that, but we believe we have, you know, room to grow on the EBITDA margin side of things, and whereby it won't curtail our revenue growth.
Perfect. And Maury, this has been a great update. Do you think there's anything else that you want to sort of make sure everybody walks away with today, a key message or something that they should really pay attention to going forward?
No, Paul, I think we covered it, especially with your last question, right? The key metrics that are important. No, like I said at the onset, I really appreciate the opportunity to update everybody. And if anybody has any questions for me, maybe what I'll do is I'll just once again flip forward on slides. Whoops, and I'll just go to the last slide, right? You can, of course, you can reach us on our investor website, follow us on LinkedIn, or I'm always happy to talk to investors or potential investors at any point in time.
Fantastic. Maury, thank you so much for joining us. We've been speaking to CEO Maury Marks, Quorum Information Technologies. The symbol again is QIS on the Venture Exchange. Always great to catch up, Maury, and looking forward to catching up in the near future.
All right. Thanks so much, Paul.
You bet. Thank you. Bye-bye.